All right, we're live. Okay, Kevin, for you that's watching out there, thank you for joining my show. This is Christine Thompson, lead agent on the CT team, coming at you again with Kevin Napoleon with Key Mortgage Services. We're going to have an interesting topic today, but Kevin, you want to just introduce yourself for the people that have not seen my show before?
Yeah, hello, my name is Kevin Napoleon. I am a loan officer with Key Mortgage,
Thank you.
and I'll give you all my contact information at the end of the video coming up.
Awesome. So Kevin, I don't want to talk about any specific loan program. I want to talk a little bit more and pick your brain on this about sometimes I get a client coming to me and one has good income, good credit score, the other one, horrible ratios. They've got massive debt. They got a horrible credit score and they want to buy a house. And sometimes they think, well, my spouse doesn't have a very good, they don't have good lending going on or financing going on right now. I don't know if we can get a loan. How would you handle that? How do you even start talking with these people for a strategy of who to work with even,
Yeah, it's something we talk about this fairly often with consumers. And when we first start, let's say you're just talking to, husband and wife, they want to qualify to buy a property. I personally like to start out with information for both of them. So I'll suggest, let's have both of you fill out an application. We'll do a soft credit check for now. Let's make sure you qualify. If for some reason one person has a really low credit score and we may not need them on the loan application to qualify for the price point that they're targeting, then we can suggest, hey, why don't we take that person off of there, run the loan just in the person's name that has the higher credit score, obviously assuming their income works as well. And that provides a few benefits. So first of all, they could both be on the contract. So they could both put their names on the purchase contract. Therefore, they could both be on the title to the property, which is the most important thing. That's the ownership piece of the
I was just going to ask about that.
Yep.
Yeah,
so that's
a
quick thought or a point of concern that comes up is like, oh my goodness, I want to be part of this. It's like, you're still part of it. You're still an owner. We're just strategically putting a loan only in one person's name. There's multiple benefits for doing it that way. So first of all, there's less review, there's less information, there's less paperwork, because we don't have to dig up pay stubs, W-2s, tax returns, bank statements for two people. Now we're going to narrow it down to one person. The financial benefit is interest rates. So obviously credit scores have a big impact on interest rates that you're going to be getting for the loan. Rates have trickled up over the past year, past 18 months. So it's a big point of concern. And people always want to know, is there anything I can do to reduce or lower or improve the interest rate? And yes, this is one of those ways we could do it. The other part of the benefit proposition is that if you are putting less than 20% down and you have PMI on the loan, private mortgage insurance, that factor is also heavily sensitive to the credit score. So by putting the loan in the higher credit applicant's name, lower interest rate, lower PMI if you have any PMI, easier loan process overall. So, and that's something that if you're listening out there, at least have the conversation, reach out to me. We can talk about putting both people on the loan application and whether or not there's a strategic opportunity to put the loan only in one person's name. If there is, great. If not, then it is what it is. We have to keep both people on there because sometimes you don't have a dominant income provider and you need both incomes to qualify, and you may not be able to do much to manipulate that. If you can pay off debt to improve this, that's also an option as well. So if there's enough money to go around where you have down payment funds, closing costs, and then a slush fund where we can pay off a credit card or a student loan or a car payment, and that will allow us to put it in one person's name, then so be it. And that will at least be an option, and we can talk through that.
Okay. You said PMI. Some people may be going, what's PMI?
Yeah, so PMI, private mortgage insurance. And it's an insurance policy that consumers have to carry on their loan if they have less than 20% down. So it's a standard industry regulation. And it's basically like, think of it as like auto insurance for your loan. So if you have auto insurance, you have that in case you have a car accident, right? You use that insurance to fix up the car. For the loan program, if you have a financial accident and you default on your loan, the lending world gets penalized. We would use that insurance coverage to offset our penalty. So the industry stipulation is any consumer with less than 20% down has to carry this insurance in case they have a financial accident. 20% or more, you don't need PMI.
Now, is that for IDA, FHA, Fannie Mae, Freddie Mac, conventional loan, every single kind of loan? If it's less than 20%, it's always PMI?
Yeah, that's for every single loan out there besides a VA loan. If you're a veteran, you qualify for a VA loan. You can not only qualify potentially to do no money down, but there is also no PMI requirement. But yeah, any other loan, conventional, FHA, IDA, doesn't really matter. It's not going to change anything. You're still going to have a PMI factor if there's less than 20% down.
Yeah. Okay. All right. So good starting information. You and I were talking earlier and you were saying, Christine, this could be a long conversation about all the intricacies about good credit, bad credit, partners trying to buy a house, get a loan. So as Kevin said, if you're watching this, you really do need to call Kevin. If you're not ready to get on a phone call, you can always just text my code here, get a loan, no character spaces, just GETALOAN, get a loan, and text that to 630-931-0045. And I'll get you hooked up with Kevin, when you're ready. Kevin, give your phone number again in case they want to call or text you directly.
Yeah, I'll give you my number and my email. So my phone number is area code 630-956-2648. And email is kevin.napoleon@mykeymortgage.com.
Awesome. Kevin, thank you again for your time. I will try to loop you in a couple of weeks from now for another update. And I'm sure you're going to have another good topic to bring to everyone that's watching. Thank you for watching this show. And be sure to share this show with other people that wants to get a little bit more educated on lending and options and packages that are out there, because there's just so much to know. And we'll also have this on YouTube. Maybe you're watching us on YouTube. Be sure to subscribe to our channel so you're going to always know when we have a new show going. It's Naperville Living, or Living in Naperville. Sorry, I just changed the name. So Living in Naperville, but it doesn't mean you have to be looking in Naperville to buy or to get a loan. All right. Thank you for watching, subscribing. Love you. And thank you for loving us back. And we'll see you next week with my attorney. You have a great day. Thanks, Kevin.
Thanks, Christine.